Hello, awesome students! This is going to be an amazing, incredible year. Let me introduce my team members. Number 1 is Wahyu Aji Pradana. 2 is Jacinta Rahmi Firdaus. 3 Osama Rahmat. And the last Vindika Rani Ayu.
Today we're gonna learn about definition of national income, calculate national income concept, income per capita, and calculate income per capita. National income is the amount of income received by all the households in a country from yielding the factor of production over one particular period of time, usually over a year. Calculate national income. Summing up the value of product produced by a country from the extractive, agrarian, industrial, service, and commerce during a certain period. Production approach. How to calculate it? Example: income national of clothing industry. There are producer type, commodity, production value, and value added. Production 1. Commodity is cotton. Production value 20,000. Value added 20,000. Producer 2. Commodity thread. Production value 25,000. Value added 5,000. Producer 3. Commodity fabric. Production value 30,000. Value added 5,000. And the total is 30,000. Income approach. Summing up all income, wage, rent, interest, and profit received by consumption household in country during a certain period. How to calculate it? Example: rent is 60,000, which is 350,000, interest is 50,000, and profit is 30,000. The formula is national income means R plus W plus I plus P.
Expenditure approach calculates the total amount of expenditure to buy goods and service products in one country during a certain period. How to calculate it? For example, consumption 25 million, investment 10 million, and export 17 million, import 7 million, and government 30 million. National income concept. There are gross domestic product or GDP, gross national product or GNP, Net national product or NNP, net national income or NNI, personal income or PI, and last, disposable income or GI. Gross domestic product or GDP is amount of product in the form of goods and service product by production units within the border of a country for a year, including this product by foreign companies, as long as territory is still within the territory of a country. The formula is GDP, income of Indonesian in the country plus income of foreign national in the country. Gross national product or GDP, the total value of goods, product, and service provided by a country during 1 year, equal to the gross domestic product plus the net income from foreign investment. The formula GNP, income of Indonesian citizen in the country plus income of Indonesian citizen abroad. GNP, GDP plus income of Indonesian citizen abroad mean income of foreign national in the country. GNP, GDP mean net income from overseas factor. Net national product or NNP. Net national product or NNP is the meaning value of finished goods and service product by a country's citizen, overseas and domestically in a given period. The formula NNP and GNP mean depreciation.
Net national income. Net national income or NNI is defined as gross national income minus the depreciation of fixed capital asset, dwellings, buildings, machinery, transport equipment, and physical infrastructure through wear and tear and obsolescence. The formula NNI equal NNP subtract indirect by addition subsidy. Personal income or PI. Personal income refers to all income collectively received by all individual or household in a country. Personal income includes compensation from a number of sources, including salaries, wages, and bonuses received from employment or self-employment, dividend and distribution received from investment, rental received from real estate investment, and profit sharing from business. The formula NNI addition transfer payment subtract retained earnings addition insurance fee addition social security contribution addition corporate tax. And the last, disposable income or DI, also known as disposable personal income or DPI, is the amount of money that an individual or household has to spend or save after income tax have been deducted. The formula PI subtract direct tax.
Income per capita. Per capita income is a measure of the amount of money earned per person in a nation or geographic region. Per capita income can be used to determine the average per person income for an area and to evaluate the standard of living and quality of life of the population. Per capita income for a nation is calculated by dividing the country national income by its population. How to calculate it?